So today we're going to be looking at pillar one, which is long-term fundamentals, and I'll run you through a few things that I look for before taking a trade or placing a position. So what we'll do first is I use Forex Factory just to read calendar data. I find them quite good, very thorough, and they just list the economic events for the week. So this week, as you can see here, it labels Sunday, Monday, Tuesday, Wednesday, and the rest of the week. So here you'll have something called, which is the data point. You'll have the actual data point that will come out at that particular point in time. You'll have the forecast. So the forecast is what the economists in that particular economy, or what the markets, they expect markets to forecast. So then they'll put the forecast. Then you'll have the previous month or the previous quarter or the previous year. It depends. It'll tell you. Like, see here, we got the Great Britain pound prelim GDP quarter on quarter. So that's a quarterly statistic. And we'll have the S&P Composite 20 HPI, which is year on year. So when it says YY or QQ, they refer to either quarter on quarter, year on year, or you can have, here we go, month on month. Okay. Now, generally, depending on a data point, for more short-term traders, let's just take a data point here that would highly impact. Let's take trade balance for, let's say, New Zealand dollar, and the Reserve Bank of New Zealand came out and said that one of the data points they're going to be looking at assessing the interest rate is the trade balance to see how the economy is performing. Okay, so they seem to be exporting, because we're in the green here, more than importing. Because when you export, money's getting pumped into the economy. Not when you import, you're purchasing from a different economy, so money's leaving your country. So let's just say, for argument's sake, that that's what the New Zealand Reserve Bank is looking at. We've got forecast here 315 million. Okay, so but look at this, it's just exceeded it, 631 million. Now, the short-term traders, the bulls, will probably jump on the New Zealand dollar, saying that it's doing really well. But this is in terms of going back to the RBNZ, stating that the data point they're looking at is the trade balance, which is, they generally don't do that. But I'm just telling you to make an example. You can use that on any data point, and it's mostly like unemployment they'll look at. Like unemployment rate's a very important data point for assessing economy's health. But they do have other tools to stimulate the economy. So what we want to be doing is we want to go through these data points when we're looking at a particular currency pair. So let's say, for argument's sake, we want to look at the New Zealand dollar versus the US dollar. So I'm going to be looking for New Zealand data. So the official catch rate, as we can see here, is 3.5%. I'm pretty sure it's been 3.5% for quite some time. Yeah. So here we go. It's been. Let's take some data backwards. So it started climbing mid last year, or mid 2014. We can bring up a graph if we want to see it. So yeah, and that's one of the things I really like about Forex Factory is they got the graph, they got previous data dating back. You can even go further back. So very informative, very thorough, and that's what you need for long-term positions. It looks maybe as if from the economic data and the news release I've been seeing from the New Zealand dollar, it looks like we could be seeing a rate cut in the next 6 months, which I'll take you to the charts. It looks like as if it's weighing heavily on the New Zealand dollar. So that's one side. Now, this is what I refer to as quantitative data. So it's just pretty much number orientated. But then I want to get a bit of qualitative data, which means statements from the reserve banks. So I use the central bank news, which you'll go into Google if you can't find it, and just type in central bank news. There you go. You've got it. Okay, so it'll bring out all major news coming out of each country, and when you start from the top, it's going to bring out the most recent news release at that point in time. So then you can see here, the FOMC had the Fed rate interest this morning. interest rate decision. So anyway, Fed meeting. Let's work down. Let's have a look for something coming out of New Zealand. Okay, so I haven't been able to find anything, and then it goes back a week before that, so you can see the date there. I'm pretty sure. Well, we'll go back. So I haven't been able to find anything there, but I don't stop there. So that's one. Oh, here we go. New Zealand Central Bank holds rates. Okay, so let's click on have a look. So, this is a news article, and you still. That's why you need to understand the economics. So you will have to understand some sort of basic economics to understand if it would benefit New Zealand, say, if we're looking at that currency, to have a rate cut, because I find news articles can be politically motivated, or they have some sort of motivation behind them. Not all the time, but generally they do. So anyway, let's have a look. So New Zealand Central Bank held the interest rate 3.5. So then it's just talking about the performance, how it fell against the US dollar, against the greenback. So 14 economists, this is something I'm looking at. So 14 economists polled by routers to hold rates unchanged. So that was for the one that was just held. Ahead of the decision, financial markets had priced in no chance of a rate move. Oh, okay, so that they're not that important, but New Zealand's rate is still higher than countries obviously like America and Australia. Okay, Australia is actually the second highest yield to New Zealand. So if we keep going down, annual rate of around 3%. So it's continuing to grow, supported by low interest rates, high net immigration. So house price inflation is elevated in Auckland. Okay, so they're talking about pretty much the property market. So we want to be looking. Okay, so here we look. It would be appropriate to lower the overall cash rate if demand weakens and wage and price setting outcomes settle at levels lower than is consistent with the inflation target. Now, this is where we go to things that would influence wage and price setting outcomes. So, earnings is something you could look at in New Zealand. The Americans have earnings, but anything relating to wage and price setting outcomes, so CPI and wage. So you could be looking at possible wage growth or job growth. But basically, we're looking at wage. So now he's pretty much said in this statement what we're looking at for now. So the bank will continue to monitor and carefully assess the emerging flow of economic data. So right now the economy is on track. Okay, but they'll be looking at inflation to. They'll be looking for indicators to show if if demand weakens, as they've said. Now, I want to go to the charts. Let's do a bit of chart work. Alright, so here I've already drawn it out, but I'll do it again just to show you. Now, 5-pillar approach. So we've got this top pivot here. Well, bottom right down here. So that's where I'm going to draw it from. So we'll go, let's hit the Fibonacci retracement. Let's go downwards. Top to bottom. So we're looking for the drawback. Okay, so just fix that up. No, take it to its lowest point. Done. Okay, now, oh geez, look at that. Well, I already drew out the support and resistance before, but look at this clean substance here. And we've got this bouncing around this level. So that interest rate decision's already taken place. Going to sell off, put some pressure on the New Zealand dollar. So what I would be doing, or what I have done, is I'm actually getting into this trade, and I'm going to be I put an order this morning, so just before this candle had opened. So this is because we go off US time, so Now, it's pretty much produced me kind of a bearish candle here. We could call that a bearish rejection candle, and it's going to bounce off there. It's going down into the 20-day moving average. So if I'm going to put my stop loss, I'll be putting up here. I could put it up at the 76.8, but to be honest, I want to put a tight stop loss. See, we can see that clean bounce there. So I might put it around this mid level here where there's a bit of congestion. So maybe here. Well, you could go to the 76.8. Because if it hits the 76.8, it starts trading up here, the trend's done. So, yeah, the trade will be done. So, what we want to be doing is, so pretty much the 5 pillars have been satisfied. We have the support and resistance on the 61.8, which is very good. We have price action. We have the bearish rejection coming off that support and resistance level. Now, we also have like I said, we've got those long-term fundamentals. So we're going to be trading this, and like I said, long-term, and we'll be following, and we're going to be tracking what's happening in the New Zealand economy, these data points. Now, if the data points start coming out quite strong, there's going to be a buying pressure on the New Zealand, so there's going to be an upswing in the New Zealand dollar. This is where we need to track. So just let's say, for argument's sake, I'll just move the chart across, and we start selling off down here, right? And we're starting to get better economic news. Well, I'm going to start looking at actually getting out of that position, because it's going to come up this way. Because it means that they're above their target, which means, you know, that could inflict a possible further rate rise. So I'll be getting out of that. But you need to stay, you know, you have to keep watching the news, following the economists, the general consensus, and following the data points of what they're going to be looking at. And it's going to indicate, because you don't want to just leave your stop loss and you've got all this great news coming out of New Zealand, it's just buying, you're just stopping yourself out. You need to have money management. You don't want to get stopped out. You don't want to lose your money if the market is going to trade against you, because of this good data that's coming out. But from what I've been following, it feels as though this and there's other factors like we got the US dollar rate hike that's going to be coming in. It's pretty much done deal that they're saying in the news, but they're tossing up between June and September, and the markets don't know which one to price in. They're selling, then there's buying, so that's going to put pressure on the New Zealand dollar, especially if it goes weaker. Let's say in the scenario that the US dollar gets stronger through the rate hike, because they haven't had a rate hike since I think 2008. This is in a lower New Zealand dollar, you're just going to get this sell-off. You might even get a break of this support, and they're very good moves, very good long-term moves. But on the other hand, if we don't get that, we need to look out. We need to stay in touch with the markets and any currency pair we're trading. We need to stay informed with the news that's coming out of that Reserve Bank and any other type of news. So that's